Hi, everyone, and welcome to the week ahead. I'm Tony Nash. Today, we're joined by Emma Muhleman. She's a macro strategist, and if you don't know her, you're not on social media. We're also joined by Boris Ryvkin. He's with Montify Holdings. He's also a former M&A attorney with Skadden and a bunch of law firms, and he was national security advisor on Capitol Hill. And Boris has an amazing perspective on macro, on history, on markets. It's really great to have both of you guys. And we have Albert Marko. Albert, you guys know Albert. So it's just great to have you guys. Thanks so much for being here.
Thanks, Tony.
Before we get started, I'm going to take 30 seconds on CI Futures, our core subscription product. CI Futures is a machine learning platform where we forecast market and economic variables. We forecast currencies, commodities, equity indices. Every week, markets close. We automatically download that data, have trillions of calculations, have new forecasts up for you Monday morning. We show you our error. You understand the risk associated with using our data. I don't know of anybody else in the market who shows you their forecast error. We also forecast about 2,000 economic variables for the top 50 economies globally, and that is reforecast every month. So we had a lot going on this week, particularly kind of in the second half of the week with FTX. Unless you've been kind of on vacation or away, you probably know about this already, but I'll recap a little bit. FTX transferred, I think, something like $8 billion of customer deposits to a trading arm called Alameda, and they lost it. FTX was assumed to be a regulated institution. It wasn't, so those customer deposits evaporated. There was a desperate attempt to merge with Binance. That didn't happen. FTX filed Chapter 11 on Friday. And then Sam Bankman-Fried apologized. We've got his tweet from Thursday on the screen. He sent another apology out today, as if that just absolves him and makes everything better. So, Albert, I know you're a huge fan of crypto. So can you help us understand kind of what happened here? And really, what does it mean, not just for Sam, but what does it mean kind of for markets going into next week?
Well, for Sam, you can look at my shirt that I purposely wore stripes because that's where he needs to go to. He needs to go to prison. You know, the crypto space has been just littered with fraud. I mean, just incredible fraud. This guy had the nerve to go up into Congress and talk about transparency, and central banks are, they're illiquid and there's no transparency. Meanwhile, he's taking customer deposits, not only just sending it to Alameda, right? But then now there's a political component of it because he was spreading it around to super PACs for the Democrats, right? This is a bigger story than people are alluding onto. On top of that, you had a bunch of Republicans come out and say, why was Gary Gensler helping him, get through loopholes in the system?
Was that actually happening? Because I saw that gossip on Twitter, but I'm just not sure if that was actually happening.
Well, yeah, this is political season, so I'm not sure if it actually happened, but you don't just come out and say something like that, right? You don't come out and just make those kind of accusations out of nowhere. Right. So there's definitely going to be congressional hearings on this. SBF was Sam Bankman-Fried or whatever, is going to be in jail at some point in time. In concerns of where the customer's money is, this is not funny. As much as I just absolutely despise crypto, right? This is not funny when you take people's hard-earned money and put it into different outfits without any transparency whatsoever.
I hear a lot of comparisons of this to Corzine from like 15 years ago. Are there similarities between what John Corzine did and what Sam did?
Oh, that's a really good question. I don't think I can really answer that because we know exactly what FTX actually did with all these funds and where they're at. Because I mean, there's stories that there's penthouses and condos all over the Bahamas and the Caribbean that they can't even touch yet. So I don't know. Really? We'd have to find out a little bit more detail of what went on, what transpired at the FTX.
Wow. Okay.
We took a lot of the deposits though and invested them in illiquid private equity investments, including VC funds that were invested in FTX.
Yeah, that's easy. Like Sequoia put in a little bit of money, and then they get $500 million back. You know what I mean? Right. It's just like
Sequoia put in $420 million that they wrote down to zero,
and then they got 500 back.
There you go. There's your 80.
It's a great deal. A great deal. Okay,
Yeah.
so
Yeah, and what was interesting was that Kevin O'Leary he had a Jim Cramer moment with FTX. He said, if there's one place where I could feel totally safe and fine, it's FTX. So apparently, because he was confident in their compliance capabilities, because apparently the CEO was like, his parents were like compliance lawyers or something, and he's probably that's not one of Mr. Wonderful's more wonderful calls, I think.
wow. Okay.
Yeah, well, when your parents are compliance lawyers, it just means that they're going to teach them how not to be compliant and not get caught. That's what happens when that occurs.
That's fair. So, okay, so what does this mean for crypto generally? Albert, I know you've not been a crypto fan for a long, long time. So does crypto is this an FTX issue or is this a crypto issue?
This is a crypto issue. This ruins the credibility of any crypto that's even valid in people's eyes at the moment. Even, Bitcoin is, the 800-pound gorilla. Well, like, even there's other cryptos that are trying to be, stable and compliant and everything, and it kills any credibility.
Do you know how many crypto pages we're going to get in the comments of this?
let them. I bring it on, because I've been telling these people for years that the space has been just a Ponzi scheme after another.
Yeah. Okay. So, does this permanently kind of impair crypto, or do you think there's a time that, 2-3 months from now, everyone forgets about it, and people are back in and crypto is back on? I just think that the crypto excitement is so persistent that I'm just not sure that this hurts it for the long time. They haven't had that moment yet.
No, not yet. It doesn't hurt it, actually, and I want to say it actually kind of makes it better, because it is weeding out the real problems and showing the problems that are in the space. But the bigger problem that they have now is, when I said credibility, is getting retail money into the space. Retail money is just not going to get into the space, and even institutional money is going to have to think 10 times more about getting into an investment in the future.
So what was it, Thanksgiving of 2019, I think, when all the retail money went into the space? Something like that, right? So
yeah.
You've got Thanksgiving coming up here in the States, and we're probably not going to have the same effect this year.
Oh, God, no. God, no.
Great. Okay. Are there any other players, do you think, that are likely to fail as spectacularly as FTX has failed?
I don't think so. At this point, I think that the SEC with Gensler is going to have to really crack down on the entire crypto space and really force these guys to be compliant with your customer rules and whatnot. So that's something actually Boris could talk about. But I think that they're going to have to do something drastic here with the whole space.
Yeah, Boris, I guess from a legal perspective, how much do these guys have to worry? Can they get it? Do you think Sam can get away with this? I just don't.
No, I don't. I think that, the issue, of course, is just going to be the chain of ownership, first of all of these shell companies. Where did the money go? Because the money's gone. I think it was something, I know that there were a lot of jokes. He went from 16 billion net worth to $1, and he can't afford his verification badge on Twitter now. So that's so I think there was, specifically because he's now requesting 94 billion as a rescue pack. Once you're already, and today he officially announced today was that they were filing for Chapter 11. So that was the official announcement made today after requesting 94 billion, which was already, when you're already at that point, it means that nobody's keeping the books. So first of all, just in terms of any kind of account, whoever the accountant is, if there even was an accountant tied to this, whoever was signing off on this needs to worry a great deal. It's not just, Sarbanes-Oxley and everything related to that, but it's just simply, who are these accountants and who was actually keeping these books? Because these numbers that were being thrown out, putting aside that it was impossible for him to get any kind of rescue package that quickly, but that number is just, it's a number that is simply not credible. So, I'm
gonna get really boring on you for a second. Most companies have a DOA, a delegation of authority, right? And so I would think that to transfer $8 billion, the delegation of authority would go up to the board level. Is that fair to say?
Well, it should, because, it depends how these companies are actually managed, right? Because these could be, not under U.S. law, managed, board managed, or, if they're, there could be LLCs involved here, which are member managed or have separate managers or what have you. It should go to the board level, and in any event, you should have the senior management sign off on the accounts, not just the accountant. It's not just simply so. even though that's the position with public companies now since Sarbox and everything else. But
Right.
I mean, even when it comes to private companies, to have for sufficient transparency to really have give investors comfort, you would need to have that chain of control. So the DOA would have to come, depending on who actually, the board would have to authorize the management to give the DOA, either broadly upfront or specifically for a specific transaction, as
Right.
it would happen. So
Because
so
it's $8 billion, like that's still a fair bit of money, right? I mean,
There were several acquisitions that he made that were private companies that were to the tune of over $1 billion each. So I guess, you got like two $1.15 billion private investments, 500 million here. So I guess that's how that all worked out.
but you would guess that those have to have board approval at some point, I would think, right?
I mean, look, I've done, in the past, very discreet deals where it's sort of like, we've already transferred 100 million for this property. Please paper all of that over retroactively, for us. So
I get that.
I'm sure that that's what happened here. In other words, there was a lot of money moving around. Nobody papered over what they needed to paper over. And right. I would be surprised if there's actually a chain where all of the documentation that was needed at each stage of the transfer was actually put in place. I'm certain that money just moved around all over the place, which makes it now very hard to track because there's going to be a very limited paper trail to find this, which is going to be a problem for him and everybody who's authorized per the documents, corporate documents of these companies for having to move the money around. So it's going to be multiple levels of potential liability.
Okay. So I would guess also that everyone in every crypto company is probably also coming up with their policies if they didn't have them already.
Yeah. Well, yeah. Oh, yes. Yeah, of course. Right. It's like, so it's like, well, what are our, the investors are going to start calling to talk about your policies. But I think the bigger issue, and Albert sort of touched on this, is the fact that this is an exchange fundamentally, right? So the issue isn't, we're talking about Bitcoin as a currency, but if you can't trust one of the largest exchanges, and I forgot it wasn't Coinbase, it was one of the others that pulled out of an attempt to, as a last minute shotgun rescue.
Binance.
Yeah, right, exactly. Right. So and that has like a second and third order effect, right? So not only did this huge exchange fail, it was such a disaster that the Binance, which is one of the more credible exchanges like Coinbase and what have you, just simply said, this is beyond saving. So it could really have a cascade effect. I know some are calling it the Lehman moment for crypto, although Albert would say there have already been 5 or 6 of those. Right.
At least.
Well, and before we get too critical of FTX as an exchange, let's look at the LME and the credibility of kind of traditional exchanges. Right. So, I mean, it's easy to point the finger at crypto exchanges, but the LME's done some pretty screwy stuff over the years. So I think we need to be really careful of just saying, well, I know you didn't say this, Boris, but crypto exchanges do screwy things. Other exchanges do screwy things as well, especially guys like the LME.
But might I mention, though, with the LME, they are now under the control of the Communist Party of China via HX.
Great.
So since that whole disaster, who is running the show, the real competent folks at the CCP.
Right. Yeah. Exactly.
Binance too. Why not get them all? Why not have
Yeah, exactly. That's why I was saying Binance is even shiftier, if you ask me, but we'll see.
Perfect. Speaking of markets and crypto, Emma, can we talk a little bit about kind of markets and correlations? How are we seeing this crypto activity, and how do we expect this crypto activity to kind of flow through into other markets, equities, commodities, other things? Obviously, it didn't hit equities yesterday and today, but it seemed to be hitting earlier in the week. So do we?
Yeah. So just as it was all falling apart, we saw a big risk-off move in the equities. We saw the Nasdaq coming down. We saw some weakness in oil that may have not had anything to do with the fundamentals in the oil market. I would venture to guess or argue that it had more to do with the FTX sell-off, because there were several companies with, including pension funds, that had significant exposures in FTX. So that oil-related selling around the time that FTX, all this broke, it may not have to do with the report, this actual EIA report of the week.
Right. So I've got a graphic from Tracy's newsletter earlier this week, where she talks about the funds and the investors that were deleveraging because in oil, because of FTX, BlackRock, Ontario Pension Fund, Sequoia, Tiger Global, et cetera, et cetera. So, there were some big players impacted by this, and I can't believe that it just impacted oil. I also have a hard time believing that it was a one-time, say, 48-hour event.
Yeah, I mean, I would think that, like, not having done any diligence, like for a pension fund, Ontario Pension Fund, like BlackRock. I mean, I don't want to call out too many names. We all know what SoftBank's about. So
Sure,
that's
yeah,
that's
exactly.
not much surprise. They were intimately involved. There's going to be a lot of problems and a lot of spillover that we'll just have to wait and see.
Right. Okay, good. I mean, at the end of the day, it is, I hate to say only, but in terms of global fund flows, it's only $8 billion of retail money that was lost, right? I say only, but it's not a huge amount in terms of flows, but I just don't know how much is in these funds themselves. So, and how much,
you don't know how you don't know how much the funds have lost and what they're trying to make up. And like, yeah, sure, 8 billion doesn't sound a lot, but in a market that's so illiquid with a lot of these funds blowing up right now, it can be a lot. And you don't know what they've leveraged off of it. That's the question.
Yeah, and what they might be being forced to sell as a result.
Yeah, that's right. Okay, good. So we probably haven't seen the end of that. Fair to say?
We'll see a long restructuring, or not restructuring, Chapter 11, not a restructuring, but a liquidation process.
Yeah. It'll be liquidation, right? And so what's the value on it?
Yeah, discovery will be fun. See where all this money went to.
Great. That'll be great. Okay, perfect. Anything else on markets and FTX and crypto? Are we looking at, is this impacting, say, European markets or Asian markets? I mean, since crypto has been so big in Asia, are we seeing impacts in Asian markets, like in China?
I don't think so. I think that's really Binance's territory at the moment right now. I think FTX was solely, the US and Western Europe.
Okay.
I would think you would see an impact on Japanese investors as well, who own a lot of Bitcoin. But just like, not the kind that puts out life insurance companies or puts people out of business, but more like retail investors getting screwed.
Great.
Yep. Retail investors have just been taking it on the chin for the last 18 months. It doesn't stop. So
30 years.
Yeah, well, 30 years. Yeah.
Except for Warren Buffett and those who invest with him, because he's yet again, everyone's underwater. He's up like 2.3%.
Right. Fantastic. Boris, hey, can you talk us through the CPI print this week? Because it seems like CPI, the rate of rise of CPI slowed. CPI didn't slow, but the rate of rise of CPI slowed, right? And so it feels like there's this, it kind of overrode the FTX worries. And there was this huge sigh of relief in markets for the past couple of days that we've kind of conquered inflation. And the Fed's only going to raise by 50 in December. And then after that, we have some 25s. What's your sense of that? Do you feel like kind of inflation's conquered? Is that base effects? Is that kind of core inflation coming down? What does that seem like to you?
Yeah, I don't think that it's conquered. I mean, what's interesting to me is sort of, the degree to which all that matters is what the Fed may or may not do, and trying to price in factional differences within the Fed. That's how granular it's now become, because I think the markets were waiting for any reason, anything to cling on to for Powell to reverse course, and to, after his very hawkish last meeting where he said, ignore all of the pivot talk, essentially, we're going to continue to do this as effectively as long as it takes to see a sustained reduction in inflation, however that's defined. So he essentially was very angry. And Albert and I were talking about this as well, that, he was very angry by some of the pivot talk from Brainerd and some other people. Yellen was saying certain things. It looked like some of the more dovish Fed members. And then Powell comes out and basically says, I don't know what you've heard about any pivot talk. We're going to stay the course until we see more evidence of multi-quarter reductions and declines in inflation. So, but it looked like the market really was desperate to find a reason to not believe him, and to hope that, anything that might persuade him to, in other words, the market is looking for anything to latch onto to have a pivot, even if we don't actually get one. So initially it was the official position, if you were even to read the kind of the superficial financial media was they were worried it was focused on the red wave. That was what was going to get the relief rally. Then we forgot about what was happening with the midterms, and now we have this softer inflation report that, as you said, slowed the rate. While most of the slowdown was because of on energy, used cars, and a couple of these other, in my view, short-term fluctuations, which are, I mean, to the extent that CPI has already been massaged to death. Obviously, we don't, listeners of this podcast, of course, know that very well. If we measure inflation how it used to be measured from the 1970s on, we'd be in double digits. I mean, that's just a fact. So taking, just looking at the core, even to the extent that they were able to massage it, what I saw here was, you know, the market latching on to the top line figure, hoping that this would bluff the Fed into doing what the markets want the Fed to do, rather than actually looking at what's happening to the core and actually looking below the hood and the underlying trends. That's what I'm seeing. You also have to take into account Biden's political depletion of strategic petroleum reserve. You have to take into account the unseasonably milder sort of late fall that we've been having. I think that's been having an impact on natural gas prices, which had this very sharp decline and now have rebounded a little bit. Certainly that's coming out of Europe as well. But I'm not seeing anything fundamental that would actually allow us to conclude peak inflation and a sustained reduction in inflation has been achieved. So I'm not seeing that when it comes to energy. I'm not seeing that when it comes to food. I'm not seeing that. I mean, the housing market is, you know, not doing well. I'm not seeing any fundamental changes in the housing market, really. So this to me seems like a short-term story, and the market overreacted, in my view, at least this week.
That's great. So from I've got on screen from Sam Ryan's newsletter, the core CPI and all CPI items, just showing you know, a bit of turnover there. So it could be you know, it could be encouraging to people who like lines, right? But if we look at the target rate probabilities for the Fed, which is the second item on the screen, you know, it does look like, you know, we have from a 4.5 almost to a 5.5 target rate. So that shows there may be ongoing tightening, say maybe into Q1, if we don't see a dramatic continued decline in the rate of rise of inflation. Is that fair to say?
Yeah, I think so. I think that, you know, it seems that the growing chorus is shifting from continue as long as it takes to fear of over tightening, at least outside of Powell and maybe one or two other people. And Albert really, I think, is the resident expert on FOMC insider baseball on that and sort of thinking, etc. But once that rhetoric shifts to fear of over tightening, that tells me that they're looking for any excuse to stop and to begin moving back, and that will just bring the inflation genie back out. Because again, these policies are being set by people who don't fundamentally understand what inflation is and isn't, and what's causing the inflation. So they're looking at the wrong things still, in my opinion. So none of the fundamentals that I'm seeing, like I said, that would really drive a sustained reduction in inflation have changed in that direction. So, and if they do decide, as you said, Tony, if they do continue to tighten into the first quarter and then decide to do a sharp 180, that's going to just bring everything back, if not make the situation even worse. So they're in a very difficult position. And I think, as I said, there's a lot of political pressure for them to move back, especially given what's happening with these midterms, certainly on the part of Yellen and the Biden administration. But I think maybe Albert can also chime in.
Let's talk about the Yellen-Fed factor. And let's also, since she's a labor economist, Albert, let's wrap some of these layoffs that happened this week into that discussion.
Oh, how coincidental that these layoffs come right after midterms and after, you know, Yellen's done everything in her power to keep the market, to keep equities up, so they didn't have to have layoffs until now. Well, now the layoffs are coming. Christmas, look, we've talked before, they'll do this right before Christmas. But also on the CPI and the inflation front, there's two glaring problems that they're staring at the moment right now. Is how's Yellen going to deal with the Chinese reopening in March, right? Because that's going to be really announced in February. They did a little bit about real estate today. They talked a little bit about real estate, supporting the real estate market, and every Chinese name that was on my screen was up 5-7%.
Yes.
Everything, and then you talk about oil, and then we have a big diesel shortage in New England at the moment, and it's been leaking down all the way into the southeast, and those are just going to add to costs across the board. And I don't think that they understand how bad inflation can really get. They can only suppress it for so long with SPR releases and whatnot, but it's coming to a head, and then I don't think that Powell's going to be able to relent. I think he's going to have to do another 75 again.
You think he's going to? Sorry, Emma, go ahead.
The thing that's just disturbing to me about that is that, like, for instance, we are going to have a serious diesel shortage coming here currently, and it's only getting worse. Powell cannot fix that problem, so let's just shoot the consumers even worse, and just like his policies they're not helping, unless you want to like completely destroy the economy and have a complete like disaster, blow up with a deleveraging and the whole shebang.
Yeah, but
we saw it in auto loans, default rate in auto loans this week, right? I can't remember the percentage of people who are 2 months behind in auto loans. It's
skyrocketing.
So
yeah, it's skyrocketing. Wait till houses start kicking into that too.
Right,
and start kicking in. But back just to touch on what Emma was saying about Powell, trying to kick the teeth into the consumers. From his perspective, he's trying to do the right things, but he's just not getting any help from Yellen or other Fed members coming out there talking about pivots.
What would that look like, Albert? What would that look like? Help from Yellen? What would that look like?
Well, she can drive the dollar down, the DX on the Dixies. That rallies the markets pretty easily.
We've started to see that though.
Well, he doesn't want a market rally, right? She can help him like spend less. Like,
yeah, Powell does not want a market rally. Brainerd and Yellen did want a market rally for the midterms. So this is the problem that they have. There's a civil war within the Fed and Treasury that is just making these policies look even stupider than usual.
Right.
And I know Powell's going to get the brunt of it because he's the Fed chair. But he only has 2 other members that are on his side. The rest of them are against him. So he doesn't really have much of a choice. He's going to have to do 75 in December.
Oh, you say he's going to have to do 75 in December? He's
going to have to do 75 because we have a CPI print coming out December 14th. It's probably not going to be as nicely massaged as this one was. So and on top of that, he's running out of time because the Chinese look like they're going to stimulate in February, March.
Yeah, that you're right. I agree with the timing on China opening and Chinese stimulus. In the meantime, it's going to be really ugly in China. Do you think that it's possible that there's some sort of regulatory relief, especially for energy, that eventually allows more U.S. supply, this sort of thing? Or are we too far down that path with the current administration?
I just, me and Boris are bred from DC, the Beltway guys. We'll just laugh at anyone with the notion that thinks that anything's going to get done legislatively in the next 2 years. Okay,
but that's nothing getting done legislatively is not terrible, right? At least we know the rules of the game and they're constant.
It's not if there wasn't problems, but there's glaring problems everywhere, right? And things need to get fixed. So you need something from Congress.
So let me throw this out to you guys. So we have seen a little bit of move on CPI, whether it's manipulated or not. I mean, we all kind of know it's always in there a little bit, but what's the timing on inflation coming back into a reasonable area? Let's say 5 to 6. I don't know. Are we a year, 2, 3 years from that? 6 months from that? What do you guys think? Emma, what do you think?
Are we ignoring energy prices or just looking at kind of the way the Powell likes to look at it?
You tell me. How do you look at it?
So if we're ignoring energy and then we're ignoring fertilizer prices and food prices, all those things, then we're looking at goods. Those, and we may see services come down and the wage issue come down a little bit, just like we've seen with auto delinquencies, used cars. These sort of things, you see numbers starting to roll over as demand destruction and liquidity has been pulled. But I think you're going to see the opposite in energy, and you're going to see diesel shortages, which pushes goods prices up, right? If every trucker in the nation has to spend a ton for every time they fill up with diesel, and they can't even fill up enough, then there's going to be not only a shortage of goods, but goods prices will thus go up. I don't see how we fix that situation. We only have X refinery capacity. It takes like 30 years to build a new one. So I don't see how that gets fixed. So that's something that's really looks like it would push inflation upward. So if we add all that together, I'd say we're going to have a problem with inflation for a good, at least another year, if we include energy and food.
Okay,
So
now let me ask this. That's a great answer. Let me ask this to Boris, because I know I'm going to get an answer that doesn't agree with what I think. But is there pressure to broker a Russia-Ukraine peace? And if that happened, would that alleviate some of these diesel price issues?
I think that there is, I know that Orban, for example, and Erdogan met and basically said to Zelensky, it's time to use this window of opportunity to start negotiating. So they liberated Kherson today, which was the one major city that the Russians were able to occupy in their offensive earlier in the year. So this is kind of a huge move with the Russians on the back foot. And these are people who are, Erdogan is playing all sides, and Orban, of course, is more kind of the one European leader that's closest to Putin, major leader. But I don't think that the U.S. is, I know that there was some discussion from the Biden administration about, don't be so categorical to Zelensky about saying you're not going to negotiate with Putin. It's irritating African countries, South America, etc. You have to start taking advantage. I don't think there's any pressure and will be in the near term, and especially after these midterm results. I think that the risk of any major immediate cutoffs in military economic aid from the U.S. to Ukraine are going to be somewhat subdued now, given the kind of the risk from right and left. So I don't think there's going to be any near-term pressure on the Ukrainians right now to start looking at, essentially trading land for some kind of an intermediate peace. But as a side issue, there was some, in terms of alleviating the diesel and the gas problems, especially in Europe, there was some discussion about Erdogan purchasing Russian gas at a discount and essentially creating an alternative for the Europeans with through that pipeline that was being built, basically through the Black Sea, etc. And there was a lot, and there was a lot of kind of talk in the U.S. and some European capitals, like Erdogan's going to save us because he's playing everybody and he's going to create a new gas hub in Turkey, as he declared, for Russian gas. What he's actually going to do, and Albert and I were talking about this too, in my opinion, is because of Turkish elections next year, he's going to keep the discounted gas, sell it at home domestically cheaply in order to drum up support for his re-election next year. He's not going to resell that to the Europeans. So that life raft is not going to be sailing. So therefore, I think that unless there is some relief from the weather, I'm not seeing any, because I know that at that moment, because the weather was unseasonably warm to a large extent, you had this natural gas glut in Europe now, which has driven down natural gas price, at least in the short term, the Dutch and etc., the benchmark. But I don't think that's necessarily going to sustain. I think we could have a colder winter, and Erdogan is not going to provide that relief. And I don't think that, I know the Ukrainians are looking at alternatives themselves, but the Ukrainian economy doesn't exist anymore really right now. We're basically balancing their budget through direct cash transfers at the moment. So I think it's only going to be bad news, and it will reinforce what Emma has said about, her predictions about the diesel shortage and about just energy in general and how that would impact inflationary changes. So I'm not seeing any major improvement. And also in terms of the broader discussion on inflation, I also agree that, again, kind of what I said before, to dovetail off of that, like none of the fundamentals to reduce inflation have changed markedly. So we could be, it's really, to me, a risk tolerance for recession on the part of the Fed. When will the Fed decide that, if they've given up on a soft landing, then, we're going to have one projection in terms of when inflation is going to start coming down dramatically. If they still are insisting on the fantasy of a soft landing, then there will come a point where they might decide we don't, regardless of what happens with inflation, recession is a much bigger problem, and we're going to have to, sooner than we had hoped, begin to pivot. which is probably not something that Powell would want to do, but that's a recession versus a soft landing versus hard landing balancing act that they're, I think, going to have to perform over the next couple of quarters. And I think that's sort of their near-term focus. And to kind of close that point off, right? I mean, I think that you know, the layoffs, and I mean, the fundamentals are cooling. The economy is slowing. We're seeing that with the layoffs. The housing market is going to get worse, in my opinion.
Oh yeah,
it's a disaster.
Look at the MBS holdings at the Fed. They've just started to tighten them. They've just started.
Right. Yeah. But then you also have to take. We talked about. You said you know, auto defaults for auto loans. What about credit card debt, consumer credit card debt? What about and you're also, what about the leverage that that's on the books of these companies that, you know, like why is, you know, the tech, which is tech is the tip of the spear. Why are we seeing all of them down 70%, 60-70% on the year? Why are we seeing the layoffs hit tech massively first? Because they grew too much too quickly and are over levered, and they have not learned any mistakes.
They did refinance in 2020 and 2021 when they had a chance of
exactly.
So they've got like a couple years.
I mean, so
yeah, they do.
I don't know who's advising Zuckerberg here and his colleagues. Like, I think what we're going to do is we're not going to refinance. We're going to double down on Meta, which we don't really know what to do with, and we're going to double up on the headcount dealing with Meta on the Metaverse thing that isn't getting adopted the way that we would want it adopted. I mean, it's like every mistake that could possibly have been made, from the financing to the headcount to the rollout to, and that's happening across the tech sector.
Yeah, but
we're financing choices.
Would you have done differently? I would have taken on all that too, because it was fun. I'm kidding. But I actually think that there are more rounds of layoffs in tech coming. I don't think this is the only round. I think
that in the auto sector, Tony, the auto sector
and auto and other guys. So I think, you know, I was in Silicon Valley in, you know, 1998 to 2001. I know that's ancient history, but my company went through 6 rounds of layoffs. I didn't know, when I say my company, the company I work for, they went through 6 rounds of layoffs. So I think, you know, all these stories about people at Meta thinking they were going to dodge it and all this stuff. I don't think this is the only one. I think they're going to have to do more in 3 to 4 months. I think you're going to see more companies bandwagon on top of this to say, hey, Meta's doing it and Stripe's done it and all these other guys are doing it. So let's use this opportunity to become more productive. And we're going to see a flood of these before the end of the year, just a flood. I think the tech sector is going to be wrecked in terms of employment. Oh
yeah, without question. Even going back to your previous point about the Ukrainians and the Russians getting some kind of peace agreement, even if they did, and that wouldn't solve the diesel problem overnight.
Okay,
even if they did that today, it would take a year, maybe 18 months until all that got rolling in again. If they lifted the sanctions, because they still have to go through that whole process for all the countries.
Yeah.
Well, and Russia doesn't like send us diesel.
No, they send it to Europe, right?
Heavy crude, and then we have to process it at refineries, which are running at max capacity. Hence the crack spreads being so wide. I mean, we can only convert so much crude into distillates, which diesel of which is one of which. Jet fuel for planes is another. But both things that, you know, cost a lot of money when the prices of the key input goes up.
Okay, great. Let's do just a really quick round. The week ahead, what are you guys looking for next week? Albert, you go first.
I'm actually going to look to see what the House majority and Senate majority makeup comprises of, and whether the markets are going to react negatively towards it. Because if the Republicans, I know they're going to take it, but when they get announced that they take the House, you know, the stimulus packages all but die at that point for 2 years. So I'm very curious to see how the markets react to that.
Emma, what are you looking for next week?
I'll be continuing to watch what's going on in crypto to see if anything's happening with Bitcoin, Ethereum, and because I mean we've already seen a lot of other tokens just literally like basically go to zero. So just see how that continues to play out.
Great. My $20 at Doge is still at like 3 times what I bought it at. So I'm just holding on to it just to see where it goes.
And then I'll also obviously, as usual, be watching China and certainly the Bank of Japan and just the yen period.
Yeah. Oh yeah. Very good. Boris, what are you keeping an eye on?
Yeah, like Albert, the makeup in Congress, and also going to be looking at some of the emerging markets, I think maybe if we're going to get more evidence out of China as to when they're still pursuing COVID zero. I think they're now recording again like a record high number of cases from April. It's not working, yet they're continuing to double down and reward everybody who's pursuing that. So I want to see if they're going to continue with that and they're going to be on track for what Albert said to reopen early next year, or if it's just going to get worse. So that's what I'm going to be focused on.
Yeah, you've heard of the Great Leap Forward, right? I mean, these
Yeah.
guys don't really take sound policy advice. They just, when they get their mind on something, they just push it and push it and push it until it harms everybody they can. So
Can
this
I
is,
offer a
yes.
theory? When you have like the worst debt crisis ever and a population that's like, put the equivalent of $50,000 down on apartments, like, millions of people have done that and they've got nothing to show for it. And you want to keep them, from acting out and protesting in the streets. It's pretty convenient to have them all segregated where they're not communicating and they're, and so I wonder really what the motivation behind COVID zero is. And so I don't know if I buy that it'll ever, end until it's convenient for it to end economy wise, whereas she feels no threat,
You know what? I don't necessarily disagree with you. I think things in China don't necessarily end until they want them to end, right? And
Yeah.
if you look at exports from China to the US, they're back up to pre-COVID levels now. So in terms of that export machine in China, it's back, it's humming, right? So there's not feeling economic pain, at least in terms of trade. So if they're comfortable feeling the domestic economic pain, then why would they stop? So I think what Albert talked about is COVID zero ending in March, and he and I've talked about that a couple months ago as well. I think that's a best case. So I think there's a best case that they end it and they stimulate in March. But it's quite possible it continues going on because there may be social reasons, there may be other reasons to not open up. So, I don't think as Westerners we can look at the Chinese government necessarily and understand the perspective they have on policy and the reasons they have for policy. There is so much inside of Zhongnanhai and all of the different things that happen that we just can't look at it rationally and say they should do A, then B, then C. And very few Americans can look at that and understand why and how it's happening. So, Emma, you may be exactly right.
Yeah, it's not illogical. I mean, it's more like if I'm she, or if I'm trying to do this, it's not really like what Westerners typically associate as logical things to do economically. It's more like
it's possible. Yeah, anything's possible. Guys, thank you so much. I really appreciate the time you took to talk through this. Have a great weekend and have a great week ahead. Thank you so much.
Thanks, Tony.
Thanks.